Good day, everybody. Brian here from quantlabsnet.com. It's been a while since I put up a full long form video. I've been working on these option chains for 10 days, heavy debugging, blah, blah, blah. I'm going to show you what I've gone through. Everything's pretty well changed quite a bit. So let me show you what we got. All right. Okay. So what you're looking at is a few things I want to first introduce you to. So this is a report I've shown before, still using. We've got kind of 10 bots on the go. We have a bunch of option bots, future bots, all dynamically created. And just depends upon market conditions. So if you looked at market conditions for today, we know that the markets are very volatile. Right now, everything's flat. You can see here, nothing's really moving over 1% at all. Okay. That's including Bitcoin, might be the mover. I don't know. But let me just show you what's been going on in the options. We've got now an options tab. I've shown this before. The way I program now in code is very different. I prefer it this way. Thank you very much. Okay, so right now we've got 10 bots. I'll show you which ones are running. Some are a combination of options, some are options of futures, whatever the market conditions say, whatever the news comes out, those types of bots get created. So right now, there's only one trade happening, and it's not completed. It's ES. This is what I want to show you. This is a very important chart. You can see here in red, by volume alone since 9:30, when the market's open, you can see here that the ES, which is basically the S&P 500, dominates both the options and future space, okay, by volume. Then you get into this one here in blue, which is 6E, which is euro. Okay, and then you might get some other like Bitcoin here, gold might be in there as well. So the more the volume, higher probability there's going to be trades, but everything's flat as I said. Here's the types of things that are getting traded right now: long, others. We have here energy options, we have crypto options, we've got equity index options. Then we get into FX, metals options, interest rate, SOFR, financial options, and volatility. Okay, so all of right now, basically a lot of the volume is driven by options market. A lot, the opportunities to make money in the markets is via the options market. Okay, so there's that. Okay, so that's generally what I want to tell you, and a lot of it's driven by this volume, which is the ES S&P 500. Okay, so let's jump into this right here. I want to show you how I interface with Claude Code because now I'm using mostly Claude Code now. To be truthful, I don't think I would be as advanced as I am, as fast as I am without using Claude. I have said that Claude is expensive, but price time comes at a price as well. If you're trying to save money, there's that trade-off between time that you spend to get a solution completed, or if you're willing to spend the money to cut down that time to get the solution. I've chosen the spending the money. I've doubled my AI monthly budget now. That's how serious I've gotten, and most of it's driven by Claude related models. So let me show you Claude Code. Okay, I've not really played a lot with Claude Desktop. I think there's lots of opportunity there. One of the things when you come in here, these are the only available models you have, all 100% Claude. This one I currently run because it's one generation behind all the others of Sonnet and Opus. So this is the cheapest. So it's in line with maybe a Codex uh, model. It's fine. It's not overly pricey, but generally It's let me just check here. Yes, okay. So yes, we're able to use only these Anthropic Claude models. This one is pretty pricey for Sonnet. It's fast, but this one, Opus, that everybody's using, 4.6, is the most expensive. Okay, and you can eat into your budget quite easily. And that's all I really use Claude Code for. Okay. Then I go. This is all, I'm doing all of this in in PowerShell. It doesn't matter if it's Linux or Windows right now. Just due to the way AI is working, I think personally you're probably better off to be on Windows. All this privacy nonsense. Let's face it, you're gonna cross the border on a kiosk where they have your iris. That right there, you can't escape that type of privacy. To be truthful. All right, so coming back to the interfacing. Okay, let me show you some iterations now. I'll show you the project that I've been working on, just so you know that this will never get released. This is the futures options, everything I've built out. And I'm just showing you this as an overview. So this is how I'm now working with um, coding. I don't hand code anymore. I think personally, hand coding's dead. Okay, if you're still hand coding, that's up to you. But as time passes, when we do hand coding as a human, that is dying, and it's probably already theoretically dead. If you want to code like that, it's up to you. I'm not going to tell you what to do, obviously, but if you want to get a solution done faster, this is how I do it. So in my case, as part of my debugging, I'm watching these set of logs here. Okay, so we have a root folder, and then we have all of the different um, folders that get created when I run a master Python script that will go out, capture news. And I'll talk about that later on. But I want to show you how I'm able to interface now with coding and Claude. Because here you can see I'm using only Claude code. But the key is I don't see the point of Claude code with the CLI I just showed you. Um, some people may do that. I just way more efficient using the Claude Code extension for VS Code Editor. Okay, that's how I do it, and it's like 100 times more proficient. All right. So here you can see I got 4 logs under this folder here. Uh, are the trading bots collecting data properly since the fix with no issue? So basically, what's been going on from both futures, it's always worked. It's very stable, no problem. Since about 10 days ago, I added in the component of the most complicated trading uh, asset class, and I'm only talking about options on futures, not options on stocks. Okay, big difference. But I'll show you the difference in the output on direction, and I kind of hinted at it on my last live stream. Okay. So what we got here is we've got simple interaction on these logs right here. log, all for each bot that gets dynamically generated, not hand coded, dynamically generated. Again, I'll talk about that in a minute. So I can now just chat with Claude, depending upon the model as I showed you, and then just ask, it'll scan the logs, making sure there's no messages of things like no data connection, blah, 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 in the logs. I think we'll do a comparative timestamp since this query was started. So I don't have to go out and delete all my logs and start over again. This thing is intelligent enough to know from this point and look at those log activity since that time frame. It's that advanced. So it will go out and do its thing, and it will read all of the log files you can see here. It will then make an assessment, looking at things like warning, no skip. Uh, there's a heartbeat working with the Rithmic server. I'll show you that again. So it's going to do all that stuff, looking for certain keywords. Okay. Then it comes up with a summary. Cool. And then it says, yes, the bots are collecting data properly with no issue. But it also will say some neat things, okay, that I've not seen with other AI LLMs like from OpenAI and whatever else. Okay. So here it's going to tell me the price of, let's say, Bitcoin. Okay. And this is, again, I keep saying this is from real market data. Okay. This is not simulated data. This is real market data from within the CME and the CME only options and futures via Rithmic. Okay. So here it's telling me it's updating every 30 to 60 seconds. It says it's still connected to my path, which is using Redis. Then it also talks about this other bot here. It's generating 250 plus ticks per minute on an ES futures contract, filtering invalid market data, continuing receiving and processing throughout the run. And then it's also doing a total assessment on the, the entire, call it, system. Okay, so there's 10 bots running. Consistent tick counts increasing over time. Active markets data processing. Redis gateway connection stable. No gaps or data loss. Okay. And then again, the system is stable and working as designed. And obviously the AI designs it and implements everything. And it gets very interesting. With the same prior question, I get a different result. So here's telling me what to know about the data and the logs. So this was the same prompt a few hours prior, and this is what I came up with, saying the fix is working. Here's the status across all the bots. So the Bitcoin Ethereum's working. Check out the number of ticks here. This is really important to know. Sorry, 154 ticks. The ES is working. Okay. The gold price is working. Look at the number of ticks it's collecting. Okay. Brent crude 8,700. Okay. Even for the ES is collecting 12,000. Okay. And then you can see here on things like SOFR curve steepener, no data, likely no trades on this contract right now. And same with the VIX as well. Okay, and it's specific on the future forward contract for VIX. Likely thin volume on CBOE VIX futures. So it's intelligent enough to say this is really not a problem because there's just low volume on this contract. So it's intelligent enough to tell me that, which is really critical. It's like talking to an expert trading desk, an expert quant coder, or an expert whatever, but I'm using the AI and it's telling me what the potential problem is, even though it's working. Okay. And then here it's got some other items as well. So here it's telling me 8 out of 10 bots are receiving live market data. No data for these because these are on other exchanges, not the CME. Thinly traded contracts. Okay, so the SOFR or the VIX, where it may simply be no tick activity right now, which is true, right? I've shown you that in that chart. Uh, that's a legitimate market behavior, not a connection issue. So again, the AI is telling me and giving me the intelligence. I don't need to worry about these particular bots because, as I said, the volume is low. Okay. So here it's telling me it's put in a simulated position as well as an order, not closed off yet. So it's giving me an assessment of what's happening with the logs, which is assessment of all these dynamically generated plots. So one thing I forgot to mention here, this is the amount of activity we're dealing with. 124,000 events. And this was launched 3 hours ago. So this is the amount of activity you're dealing with across 10 bots, across futures and options in the CME markets. Okay, so that is why it took me 10 days, because we have now, we have over 10 bots, 12 bots sometimes competing through a gateway from the architecture point of view of competing for that one connection that Rithmic allows. So what happens is you get concurrency problems between not just the options bots, but they're still trading at the same time with the futures. With the futures, it was easy because the volume of the requests to Rithmic was much lower and much more reasonable. Once you add in the options, now it's competing against for that one connection. So there's all kinds of problems you don't know. So originally, how it was set up was that it captures the futures market snapshot of whatever the bot wants, and then also has to go in and basically download the entire options chain that it's been requested. So that's a lot of data, and you have 10, 12 other bots competing for that time connection into the market data provider, Rithmic. So we have multi-concurrency, and that's why it took 10 days to figure all this out. On top of when I went into Claude with the VS Code here, you can see it's originally named uh, Agents Option Chain Claude. So I went all in with using Claude to collect the news data and have Claude also generate the bots. So I'm sure you've heard the news that Anthropic just suddenly cut off all the third-party harnesses uh, to no longer use Claude models. Well, lo and behold, you don't even know what a harness is. So for a good couple hours, it was not collecting the data. And remember, there's no error message here. Not connecting into the Claude models because of that news event. So I had to go back to using Codex to create uh, dynamic trading bots, both for options and futures. So that was another big event. So all this stuff took place, lots of complexities. So we're now at a stable point. So how it basically works is the bot will go out, collect the news, and then it will have to whatever when it creates uh an instrument will capture. First it has to figure out, this is how complicated options are. First it has to do what the AI calls an ai an AI options chain discovery. So if you have a forward contract, let's say ES for May or June, you also want to know what are the associated closest option chains available for that futures contract. And there could be 10, 20, all related around volume, all related around strike price, and all the other analysis that goes on. So it has to go out and find the most appropriate option chain. Out of those 10, let's say, it's going to have to analyze which one gives you the optimal strike price and the like for everything else that goes with that option chain. So when I was trying to download it live for every request coming from the trading bots, uh, it's more data, more connectivity issues, blah, 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 blah. So what ended up happening, the AI suggested one of two things. This is not physically possible to implement as is. I think this is using Opus 4.6, the most advanced model out there on the planet as we speak here on April 9th. Then it gave me a couple of options, either not do options at all, or the only way to get around it is by going back to my futures broker, cleared, saying, hey, I need a second Rithmic data feed for just one data feed for futures and an exclusive for options. But I think you'd still be having network and connectivity problems with an exclusive data feed just for options. Like you're still going to have concurrency problems. So what ended up happening is now this is where you've got to be very, 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 very smart. Okay, AI is not going to help you here. You have to have hopefully enough experience from an proper architecting standpoint because you have all these problems. You understand what the problems are from a technical point of view. And then I just thought, okay, this is the challenge this thing's facing. I have this option or that option. I said, just go out, capture one option chain, and I know that these dynamically created trading bots are only going to last for maybe a day. Just go out and grab the one option chain and use that for all the option chain information analysis. That's what I did. So that's how that works. Okay. not ideal, but technically, unless I'm spending a lot more money, which I'm really not prepared to do, this was the best option I could come up with, like the middle ground. Okay. So there's that. The other thing I want to show you here is back to this dashboard here. You'll see here we've got some runtime errors, these things right here. Okay. So this is just a typical, very complicated problem that I think a lot of the vibe coders will have. The Opus is very good at debugging and finding bugs. If you still don't understand certain logic errors, so what I just showed you here is a typical runtime logic error. These are very, very difficult to diagnose. So, but this is JavaScript. So thankfully, with JavaScript, it's fairly easy to bug. But I want to show you the results of this. Okay. So we've gone through a couple examples of the prompting. And again, I'm not doing any hand coding here. Just as a hint on what I'm doing on how to debug things. On top of that, you have to know some of the architectural concepts to kind of really take advantage of it. I remember I've been coding since I've been 14, and I'm technically been doing it for over 40 years of my life. Yes, I'm an old fossil. But here, what I'm talking about with let me just trying to look for the prompt right here. So I asked the AI, fix the analysis, this error in this HTML file. Okay. That's all I did. I asked it to do that. And look at, um, it has to read everything. And then it figures out that in the HTML, it looks at what's creating the data source. So it goes into the Python that creates the data source. And look what it ends up doing. Very powerful, this Opus. So it figured out that this argument is created by other Python scripts to get to this point. So it figured out it's this one Python script, option chain static, wrap file load operation and try exception, validation for globe pattern, gracefully problematic. This is very optimal fixing on the code level. Option chain integration, added exception, load, news context, so missing or inaccessible news, fallback, and neutral sentiment. And that's all generated by one error, logic error, in JavaScript. And it's so advanced. And because I'm using Claude Code with the for VS Code, it can scan the entire project, every single file here, both in these individual beta files and the root folder as well. So it's so intelligent. It can reverse engineer everything and figure out that error is coming from Python scripts, not from the HTML file, and it corrects everything in the Python files. So what the root cause was Windows path handling in the global pattern when searching timestamp, blah, 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 file error, gracefully preventing worker error. Okay. So you may think it's a valid error, but this is where you got to have probably the most advanced LLM out there, which again is Anthropic Claude, on top of for debugging. You like these files, total size of this project's probably about a gig. Okay. I'm gonna show you why, and I've kind of shown this before, but it's much, much, much more sophisticated now. You can see how everything just grows and grows and grows into this big monster. On top of it's running 8-9 hours a day. I could run it 24 hours. Eventually, with CME, they're going to have 24-hour trading, and I can have it running all day, all night if I want. So everything grows, okay, and I can have it self-adapt as well. So just to give you an idea how sophisticated this has become since I've added it was already sophisticated as it was with just the futures only, but now I've added in the option chain stuff. You can see it's probably complexity. It's probably magnified by times 5 at least, maybe times 10. I can't say because of the concurrency in the data that's being pushed through this entire system. So there's that. Okay. So if you're still here, thank you for watching. So here we have basically uh, the root folder. Okay, right here. And this has been in development for a couple of months now, but it's grown and grown and grown, and I will not release this. And I know there's people on YouTube that follow me that'll try to replicate this. That's why I'm trying to give uh, high level analysis from an architecture standpoint, but it does get complicated. So what I'm going to show you here is my groups on the quant analytics. Now this will go up and double again within probably a few weeks because of the stuff I'm putting out there. So in here, what I do is I provide let's see, four right now, 4 PDFs, okay, for each news gathering, download, creating all of the different bots. I could run this all day, all night for each set, okay? But it takes about an hour to run this whole process now, um, because it's so complicated since I've added in the options portion. All right, so let's take a look at one typical folder here with dynamic bots and all that. So in here, you can see there's an associated log file. Let me just close this up right here. So you can see here, it's in detail, like immensely. So we have a heartbeat. We have that heartbeat is connected into this Rithmic gateway right here, and that's the equivalent of a server, we'll call it, where it's the interface to Rithmic servers using the API on top of talking to all of the bots, these dynamically traded bots. Okay, so there's that. Okay, there's about 10 to 12 each one that's generated. So this is a typical log. Also, let's just try this one, some of the coding. So this is now dynamically created by AI. Everything's, everything's AI. But this is so good that I have an AI Python script that will generate dynamic bots based around news. So this is a typical bot. This one's created by Codex 5.3. Now, if I was still using Claude Sonnet, which I no longer do because that news event, the code would be a lot more sophisticated and a lot more, about double the size. Okay, and the complexity of the actual models and uh, models and algos and all the analysis to run this particular bot, which is really strategy designed for a news event. Let's just see how many lines this is. So this one's 800, but I've seen them where Sonnet will generate up to 1600 lines, so double this. Okay, so each of these bots are dynamically created based upon news. So we have a bot VIX call overlay, a bot ULSD crack spread caller, SOFR curve steepener. There's a couple of Bitcoins in Euro USD risk reversal, all built around the news. Okay. So let me just see the status of what's loaded right now. So this is how I do a refresh. I could do this automatically, but again, it just adds more complexity. Just a couple of buttons. I mean, it's not a big deal. So there you go. So these files are getting big. So I don't think anything's really changed. So there's only one trade still, right? But you can see this number of events now has jumped up from 137 to 143,000. There's a lot of data being pushed through here. So these are all the different bots created. Okay. This right here, this launch bot will launch everything. Okay. Everything's all identified. Everything is advanced in terms of AI implementation outside of MCP servers. I don't need MCP servers at all. But that's a real thing now. But let me just show you where it gets very interesting. Okay. So let me just go back here to today. Okay. So there's 4 PDFs plus the bot plan. Okay, the JSON file. So let me pull that up. I'll just do Notepad for now for speed. So here's the bots that get generated, all based around news. Okay, so in here we have a strategy. Most people, oh, let's say gold. Again, this is from news of today. Employs a long gold call spread financed by short put risk reversal to capture geopolitical tail hedging demand while reducing premium outlay as described in the report's precision metals section. I'll show you that report. So basically it's doing a long one time two call spread plus a short 1+1 put where it has a 25 delta risk reversal. That's all option trading speak. Now I have a whole course on that, but you can see basically it's using the institutional mindset instead of retail. Let me talk about retail for a minute. I just read a report from the Codebase letter, if that's what it's called, the TBL. They said millions and millions of retail traders have now dropped out of the market. Okay, including the futures and options. So the volumes are lower. Um, so it's all really institutional right now. So you want to trade like institutional. You can see here we got some stats here on the time horizon, on the projections, and so on. Okay, it's all simulated. I just want to make sure that's known. Here we have, because of what's happening with the war in the Mideast, we have a lot of activity on oil. Here's another one. Brent crude front month versus second month calendar spread to exploit geopolitical risk premium fluctuations. Again, that's for fluctuations of volatility because of the mind of Trump. Prompt deferred crude dynamic, as emphasized in the report energy section. So it's all driven by this so-called report. So let's check that out. So let me go through all the bots though. So we have a Bitcoin Ethereum future beta Jess's spread. And I've mentioned this in my live stream. Bitcoin's still a big thing. Okay. We have here oil's another big thing. Okay. We have here gold future call spread with risk reversal. Again, involving options. SOFR futures curve steepener with option overlay. Okay. We also have an E-mini S&P put call spread caller, pretty standard. WTI inter benchmark spread arbitrage. So here it's using different combinations based upon the Hormuz Strait arbitrage opportunity. Okay. CME Bitcoin option call fly with dynamic delta hedge. Now I'm going to show you, and I've mentioned this. It's so important. If you're a retail trader in Bitcoin or anything crypto, Ethereum, Bitcoin specifically, you're getting hosed. If you don't understand what the institutions are doing at the options level, you're just guessing what they're doing. Okay, you can use all the charts you want, use all the news you want. It's not going to help you. Okay, because that's what institutions are doing now because they're big time involved in Bitcoin. And I've talked about this before as part of the stream. When you have the three big now exchanges, CME, Bitcoin, and Ethereum, which is usually the biggest one. Then you have the overnight trading, which is usually on Binance, because of Asian traders. And then on top of that, and that's usually perpetual market, futures market, and options market, which is fine. Volume's big. And the next little one is Bybit. But usually CME volume is now just as big as the other ones based upon the official news sources that I'm getting, not what you read on YouTube or what you get on Twitter. I think there's so much BS on there. It's not funny. Continuing along, we have Euro USD FX future risk reversal with option overlay. Okay. There's gas oil crack spread futures with option collar. Okay. the Bund BTP sovereign spread futures with conditional options. Okay, we don't trade. Everything I do is U.S. specific, so we won't trade this because I want to have access to the market data. I could pay for it, but I'm not doing that. Then we have VIX futures call overlay for equity gap risk. This is all institutional level stuff if you can't figure that out. Okay, so let me show you the big report this thing's talking about. This guy right here. So in here, there's 4 classifications from the news. Okay. So we have crypto futures and option institutional read through. That is so important. Okay. So here, what's happening is I've talked about the relationship between Bitcoin and Ethereum. That's very common. Okay. And then it'll also look at the overall spot ETF complex comparing against the ETF inflow outflow into ETFs, namely IBIT and others, despite new product launch selective inflow elsewhere. This is what drives the price of Bitcoin. Institutions, because they're driving the volume now, like it or not. Derivatives narrative. Whales reportedly skewed both short Bitcoin Ethereum, headline option interest cluster around higher Bitcoin strikes. If you don't know what that means, or you don't even know what's happening is, don't trade Bitcoin. You're just kind of like throwing money at something that you're guessing at. Seriously. Then you have Ethereum. Okay, super supply flow. So the foundation for Ethereum, conversion, sales, ad event, supply pressure. Did you know that? Security compliance, headlines, exchange mistakes, cyber theft, and so on. Raise risk premium for venue, funding, settlement, equality. So that right there is going to add in the risk of Ethereum. And then based upon the AI, we'll figure all this out. We have a basis carry book. Okay, so again, right there, based upon CME versus offshore perpetual versus ETF demand. So those are the 3 dynamics that are going to push the overall price or impact the overall price of something like Bitcoin. So if the basis collapse faster than perceived, realized volatility deaths, reverse the cash and carry style expression, or reduce long basis inventory. If panic dissipates, basis re-steepens, macro funds re-enter, calendar carry options right there, long deferred, short, near, or vice versa, depending on the curve shape. Well, I go on and on and on about this. Okay, so that is what drives the price of Bitcoin. Then we have the volatility regime that analyzes right here. Short data implied, elevated around geopolitical and regulatory headline, wing demand on both sides, upside call options there, breakout narrative, low and high, ETC strike, downside put option called right there, whale shorting narrative plus inflow outflow persistence. Then we get into skewness, squeezing, all that stuff. Then we get into the institutional level involving long gamma, short vega. Again, this is all the Greek analysis I've gone on about. Again, option trading. Call spread finance with put spread, seagull type, blah, blah, blah. Upside participation with lower premium burn. Okay, protective collar. And now it's involving over-the-counter treasury desks to warehouse crypto risk. Okay? And then the famous risk reversal. Okay? Directional macro book when skew is mispriced versus a catalyst path. Now, I could go on and on and on. Okay? But then you get into the commodities impact also as part of that risk against Bitcoin and Ethereum. This is what I'm trying to tell people is that everything's all driven by options market, just based upon some sampling I've given you. We're only on page 3 of 22 pages. Okay, then we get into macro analysis on FX, equity indices, metals, blah, blah, blah. Tokenization on perpetual swap, that again impacts sure, though. Here, because it's CME only, you won't hear about Tether or USD Circle. That's a huge impact right there. But you have liquidity, tiered execution, blah, blah, blah. hedging as well. This is what institutions are doing. People are not understanding that this is what drives the price of both Bitcoin and Ethereum. If you're not getting access to this sort of stuff and trading off of it with the intellect of trading options and futures in regulated markets like the CME versus Binance, and Binance can do whatever they want and negatively impact you on your positions. Um, you know, there's that. Then we get into oil and gold on the futures only, and you're going to get slaughtered there because you're not understanding what's going on in the options market. So there's all this risk measured out. So here you can see, this is what the big funds are doing, and this has in price impact on oil. If there's this risk or this event, the discretionary macro and commodity funds may reduce emerging long beta while keeping optional upside for renewed disruption. It's all done through options, puts, calls, the like. Then you get into this deleveraging mode or chop mode of volatility. If it's realized, remaining high trend and signal weaken. Okay. Now, depending upon the model that generates this, in this case, Codex, you get different types of analysis. But this is the best we can get with Codex because I cannot really do it no more with Anthropic Claude models, as I mentioned, with the harnessing and all that. But you can see here it has impact on the oil price using options. Okay, so I could go on. Then we have Brent and WTI spread, impact on refining, which impacts your all these instruments, namely jet fuel. Okay, so if you want to know about pricing on jet fuel, how it impacts airlines, blah blah blah, you'll be weeks ahead knowing this. But you can also understand what's going to happen at retail and the gasoline pricing, heating oil, diesel, blah 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 blah. Okay, all because you're analyzing the options market. Okay, not just only futures. You're going right into the deep end of understanding what institutions are doing, and they have impact. So here's another interesting one that you can look at that you don't hear about in the news. That's why this type of report is very, very valuable. You can see here, tanker booking, recruiting, or rerouting headlines imply freight optionality remains valuable in listed space that can be bleed into. Okay. True time spread volatility, basis premium, and exportable grade. When you see the word basis, that is a future talk, but there's also interrelated with the options because the options, as you can see, it's the risk that is measured through this. Short dated opportunity, and it impacts other things. And it gets right specific into Brent Dubai, and then OECD impact and what it sees. And that's just oil, right? Then we get into precious metal and how it impacts gold, silver, and the like. Right here. Anatomy of a fail suggests a classic pattern. Event premium gets priced in, then partially fades or ceasefire optics, but recurring conflict keep risk tail hedging alive. So depending upon the news, you're able to plan around that. And that's all because of options. Again, I could go over this. And then it brings in all of these institutional level trading again on retail Forex. So you get those technical analysis chartists on MetaTrader. If they don't understand what's going on and what's driving the price of euro, Japanese yen, and the like, okay? Sorry to tell you that, but this right here is what's driving that. So we have here euro rate future, Bund future options, Europe's energy sensitivity and election, and Hungary, blah, 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 impacts euro. Okay? And you can say the same thing on the yen and the like. So again, here you can see all of the options projections made based upon this news. And this is telling you exactly what a lot of the institutions are doing. And they're the ones that impact price. Gold convexity retained in geopolitical portfolio insurance. Okay, and you hear about all these YouTube doom and boomers and probably Twitter X uh, about this insurance of gold. That's it. But you don't know why. There's all these things underlying that are impacting this call. And that's why they're dumbfounded on when they say buy gold and gold is flat or declines. This is what's driving all of it. Okay. Um, it just goes on and on and on. So we have US dollar. Okay. We have options on that. Okay. We have the SOFR, which is the overnight rates on the euro dollar, and that has impact there. We have a euro focus again, all the different complexes of the bunds in Germany for now. I could go on. And look at you also get access to New Zealand, Mexico. There's no volume there. Sorry. Bull futures, this is the big one. Okay, and it explains what's happening in the options. All spread detail, geopolitical upside, collar, reduce carry cost in trending periods. Okay, so it just goes on and on. What's happening in the news, and it will give you future and option talk or speak. And this is how everything's really done. The more you read this, the more you understand it. If you don't understand the concept, there's got a course for that, of course. Institutional takeaway. And it's again, I keep saying the institutions will always drive price. Now we're just about halfway. Okay. So I'm going to go through this pretty quick. So you can see there's very little impact on the stock market. But here's the first one on the micro S&P, okay, and maybe Nasdaq and Russell, okay, and then the CME volatility as well. So if you're only trading equity, meaning ETFs and stock, you're missing out on where the bigger opportunity is with, as I said, energy, precious metal, and crypto as well, and treasury, but doesn't move much. But be surprised by that as well. Where it's too myopic to only trade in stock and equities. And the way it is very flat, and you could probably do okay there from a investing point of view. But if you want to be active and you get the right type of system built out or the right types of calls, you this stuff can change your life. There's always the high risk of both the upside and the downside if things don't work out. Okay, I could go on and on about this. Okay, uh, all option related with the gamma dynamic, blah 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 blah. Everything's all impacted interrelate between the treasury, the SOFR as well, and how to position everything. Okay, as you saw in the bots. Okay, I could spend hours on this, but this is the crust of it. So, from a careers perspective, it's this with the portfolio managers that will run probably I don't know 5 trading desks, 10. I don't know how each firm is built, but usually the portfolio managers will run this, analyze portfolio risk and all that, and performance, and they do that manually. But we have here complete um, end to end, gather news, build a bot or strategy and build it on impact. And we can do that anytime we want. And the very valuable part is that we're now able to dynamically build out with option chain. Okay, that's the most important part of the whole thing. Okay, very valuable, very expensive to do, but looks like we have accomplished that. Then we have the impact on cryptos. Comes back to, of course, on FX, Forex, here, Canadian versus oil link expression paired with Brent WTI view. Um, and you're usually watching this, you'll be weeks ahead of the calls. Okay. You'll know what's going on. Okay. Um, it's really, really, really important to know this stuff because everything kind of is interrelated, built around risk and what you trade based upon that. But being in the know-how is very important. And again, we have to build out projections on things like inflation. What happens if there's slowing growth? That can have impact on volatility, obviously. Blah blah blah. And there's just all these things that you can plan out. Here, again, small representation of the indexes, the market indices. Okay. Um, there's just right now there's very little uh bots perform, but as it's shown here, it's still the highest in volume, wherever that went. Yeah. Anyways, showing you the ES S&P 500 by a long shot still driven by volume compared to everything else. Um, but you can see here, you can see some more uh, calls on USD, option risk reversal, Euro USD, downside, the yen. And then you get to see what's going on in China, maybe, or in somewhere in one of the emerging markets like Mexico, let's say. Okay. Um, and you can see here on freight, shipping derivatives, carbon, you would think, right? There's just one snapshot of what you can see in the markets. This is why everything's going to be going up and up and up in my feet. Okay. Because of being able to generate stuff like this. Even if I live trade it or not, knowing this for signals to be generated out of, and more importantly, being able to generate these dynamic bots. So, for instance, let me show you yesterday's call. Hopefully, this will work. So, I'm going to load in yesterday's data. Okay. So, as an example, let me go to yesterday. Let me think here. Maybe this one might be good. Okay, no data there. Um, one of these have data for sure. Okay, let me just see how big these are. Yeah, this might be good. Okay, so we're loading in all of yesterday's data. I don't know how long this ran for, um, but this is what I want to show. Okay, so coming back to this is a much more realistic uh, snapshot of what happened yesterday. More activity because of the markets went up because of the peace deal or whatever. So here we have 60,000 events. This probably ran for like maybe 2 hours. 11 bots, 100 trades. I'll show you in a minute. Blah, 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 blah. So the only thing that really ran was this one and this one. So what we have is ZT and ES again. Okay. So here, as I let this one run, okay, performance started to kind of improve. I've seen that before. So this is all simulated. I've talked about simulated versus backtesting. The idea here, when you have a market that moves instead of a flat market like we have today, this type of bot, if it's profitable, the goal will be eventually to move it into a live trading environment and have it live trade with real money. Okay, that's the goal when the markets allow. Okay, because right now for yesterday looks great. Running this type of strategy um, was not profitable at all. For one profitable profitable position, we had two losing ones. So it's not worth going. So you'll see here. So this will be set for a different market condition. Let me just see here. I don't know. I don't know what kind of. I don't want to go looking for this much time taken up. But I wanted to show where we're at with this options, much more sophisticated, real market data, real market analysis, real market uh, strategy, bot simulation that can be run daily, blah 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 blah. Okay, so it goes right across the entire spectrum of available instruments to trade on the CME. Pretty well everything. Okay, if the volume's there, the opportunity is there, this market condition, and the dynamically generated bot strategy allows, it will try to trade it. Most of the time, I'm finding it's about a 10% out of all the bots, maybe one, maybe two, like what I showed, might trade. Um, and then out of that, you still want to see profitable opportunity. So we're there. We got to wait for the market conditions to improve and be able to trigger profitable orders. So once we start seeing that, I can deploy these bots into a live market. Okay. And then the other goal is the interactive broker stuff that I can also show as well. I'm going to have a separate video for that. Anyways, I know this is a very long video for those that are still here. What I would recommend is go to my homepage, quantlabsnet.com. A couple options here. You could learn, get a free little book on C++ HFT ebook, which is already out. Hundreds, probably thousands have been downloading it. Put your info. I don't spam at all. I don't release your information. And while it's still affordable, with what I've shown you, get access to those kind of PDF reports, you can try this out. This will be going up 50% Monday, Tuesday next week, early next week. So today's April 9th, just so you know. And as I said, that's going to be much more expensive. If I can do this, run this every day, I can run it multiple times a day, these kind of reports. All right. And then I might, depending upon if there's enough demand, I might add in the interactive brokers as well. What I'm planning or could do as well. Anyways, I'll leave it at that. Thanks for watching. Have yourselves a good day.